and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you could join us today. Before I welcome today's guests, I'd like to thank our 2025 President's Council sponsors. Now, these are companies that provide a tremendous amount of financial support to the California MBA, in large part so that we can continue to be the strong advocates for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Consolidated Analytics, Funding Shield, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kiter, and Western Alliance Bank. Thank you all for your support in 2025. We really appreciate it. With that, I'd like to welcome today's guests. I am welcoming Susanne Livingston with RWM Home Loans and Jimson Tharayil with Acrisure. Welcome to the podcast.
Thank you, Susan. Thank you for having us.
Thank you for having us.
Today's Acrisure is a member of the organization, as is RWM. Today's conversation is really going to be about the California homeowners insurance crisis, and something that, which is an issue that the California MBA has been very involved in, but I have some great insights from my panelists today. But before we get started, I'd like to let you just do a brief introduction. So Susanne, why don't we start with you?
Absolutely. Well, thanks again. And Susanne Livingston, co-owner of RWM Home Loans, founded over 30 years ago in San Diego. We are an independent mortgage banker licensed in approximately 30 states across the nation. So we've seen a lot over the last 3 decades, and looking forward to this conversation today.
Jim, how about you?
Jimson Tharayil, also in San Diego, lucky to be. Head up strategic partnerships at Acrisure. So Acrisure is a top 5 global insurance broker, and with a lot of specialties. But specifically, we work with top lenders to help their homeowners get instant insurance quotes during that underwriting process.
Perfect. Okay. Well, let's get into it. So let's just start with a very broad question. So what can you share with our listeners about what is driving kind of an increase in homeowners insurance rates in California?
Sure. You know what? There's a real convergence of factors, right? It's not any one thing that's driven up, HOI costs over the last 5 years. I think the first one that, we're all very aware of is the increasing frequency or severity of just climate events. So in California, that would be, the fires, it would be the flooding, the mudslides, things that have had really concentrated impacts in certain areas. Obviously, there's rising construction costs and labor costs that come with inflation. So there's, supply chain disruptions that came out of COVID. There's something called reinsurance, right? So as insurance carriers have claims, then the cost of reinsurance goes up. So then that all comes back down to the individual home buyer, right? And then last but not least, you have carrier exits from high-risk states like California and Texas and Florida, due to some restrictions in regulatory or, pricing flexibility. And so, when you look at, the why, it's not any one of those things, it's a combination of all those things.
Right. And Susanne, from a lender's perspective, I mean, how I assume your borrowers are very impacted by this.
Well, absolutely. I mean, Jimson already said, if your insurance costs are going to go up 61%, I mean, that directly monthly is going to affect that homeowner. And right now, 80% of our business is purchase business. So if we're looking at trying to qualify a buyer with interest rates that have been not rising this year, but certainly we haven't had the 4 cuts that we foresee for this year, not yet anyway. It drives those debt ratios up. So that's a concern. It's also a concern for those clients we've had over the last 30 years, right? Because, many are getting the cancellation notices in the mail. They can go to certainly the California Fair Plan, but, they don't understand how you can actually have 2 insurance solutions, to rectify your problem and your costs that are being driven up. So it's definitely affecting us for not only our purchase business, but existing clients.
Right, right. So what can homeowners do right now to, to deal with these issues?
Well, I think as a homeowner myself, I'm one of those people where my insurance, we got that phone call from State Farm, you're done. We're like, what do you mean we're done? And we opened up that conversation and definitely took advantage of the California Fair Plan ourselves, but also did sort of a joint insurance with State Farm, who was our carrier. So they are insuring up to a certain percentage for certain things. And then the California Fair Plan is making up for the differential. But the other thing that, you have to discuss is how do you make your home more defensible? So if homeowners have an HOA, many of those homeowners associations are sending out notices. You need to make defensible space, right? So you need to clear all that brush. If you have a tile roof, for example, that's really good for fire, but you might need to harden. They call it hardening your home, where the eaves are still wood underneath. So you want to make sure that those embers can't fly up underneath your eaves. So there's certain things you can do that to, prevent that. Water detection, water shut off, because again, you saw that in the Malibu fires, either water was not available or water or gas issues. You got to know where those shutoff valves are so that we don't either waste it or need it, when it comes time to, in a case of emergency. And then bundling policies, talk to your carrier about, hey, how can I save, drive that cost down by putting everything under one umbrella, if that's possible. So just a few things that we've been talking about.
Jimson, on the insurance side, how are they, kind of managing this environment we find ourselves in?
Yeah, so everything that Susanne mentioned, that's everything that the individual home buyers can do to help mitigate risk and keep those premiums low, and that's important, right? On the insurer side, what we're seeing is a shift in policy models, right, to kind of reflect this changing landscape, right? So if the risk is going up, but you have to keep the premiums down, the only way to do that is by adjusting the coverage on the policy. So what you're seeing in new policies is sometimes, actual cash value replacement versus replacement cost. You have in some markets like percentage-based deductibles, right, where the deductible is a percentage of the overall catastrophe, right, as opposed to like a flat deductible. And then, just a lot more customizations. Carriers, and especially specialty carriers, giving you discounts if you put certain risk mitigation efforts into your home, right? But like the standard, like this is deductible, this is the coverage, like it's not as sustainable in a current market situation.
Right. Let's talk about how, because I know, as you said at the top of the podcast, Jim, there's several factors that have contributed to where we are today. Let's talk about how state regulation has impacted the landscape of the insurance market in California.
So regulatory hurdles in California, it's kind of like a double-edged sword, right? Because on one side, there's some good intent in it, and that intent is to keep the cost of premiums low and affordable for the home buyers that are in this market, right? And so while they aim to protect consumers from those dramatic premium increases, they can also disincentivize carriers from operating in those states, right? Really then reducing competition and reducing coverage availability, right? And the problem is that, when private insurers leave a market, homeowners are turning to state-backed insurance programs, right? Which are very necessary. And the problem is, they could, though, sometimes be more expensive, have more limited coverage, but more importantly, they can discourage the private insurers from re-entering that market, right? And so while they're a necessary safety net in the near term, especially in times of volatility like we've been facing, it's not like the long-term sustainable solution.
Right.
Yeah, and I think it's interesting, Susan, having served with the California MBA on the board for over 10 years. One thing, and with your experience in politics, is I learned is that regulation doesn't change overnight. It's an educational process. We have representatives that need to get up to speed. And what I'm really encouraged by is our current commissioner, Laura, has already put in place a sustainable insurance strategy plan. So for any of our listeners who are curious, just Google that sustainable insurance strategy plan, and it comes up, and he has outlined very carefully some new procedures that they're considering and putting in place. And one of the things I found interesting was the catastrophic rate modeling, because all across the country, we have different risks, right? And different, we might have more fires here, they might have more floods someplace else. So if we can create some rate tables that take into account those risks, so that those in those areas perhaps have to share or have a higher rate than someone else who's not in an area that has those risks. So it's cool that they're open to trying something a little bit different to try to stabilize this insurance market, because as Jimson said earlier, we've got to bring that back so that we can bring the wide variety of carriers into every state, and so that our borrowers have choices.
Right. Yes. Thank you for bringing that up. Yeah, the California, the sustainable insurance strategy by the Department of Insurance is something California MBA has supported, and we'll continue to work with Commissioner Laura to see if we can help bring some stability back into the market here in California. So let's talk about technology for a moment. Where is technology in this space helping, and where is it falling short?
Absolutely. So tech is making a big difference, right? When it comes to two things, access and speed. Right. So at Acrisure, we've actually integrated with platforms like Encompass to use loan application data, to go out and shop to 60 carriers all at once. Because a new homeowner, they don't have all the details about the home that they're just buying. They don't know when the roof was replaced. They don't know the plumbing, the electrical. And so we could use a lot of that, loan application data plus third-party data and go out to a broad market of carriers. Because unlike the old days, you can't just rely on the few national carriers that were your go-to to be able to get a competitive quote, right? And what we do then at that point is, connect to the national carriers, connect to the local carriers, and then connect you with an expert, right? Because there's little things that could really change the cost or the coverage of that premium. Do you have a trampoline? Do you have a type of dog? Are you willing to bundle this with other policies? All these if-thens can have significant impacts on the overall premium. But, unless you're talking to an expert that knows those nuances, it's kind of hard to get to that outcome.
Right.
Yeah, that's really interesting, because I think that, if we throw it back 10, 20 years, it was the personal relationship for insurance that drove who you chose for your coverage. Sure. And for the last 5 years, we've been trying to integrate, if you will, technologies, to Jimson's point, that can give our borrowers that instant wide choice of all through, like a big brokerage channel, so you're getting the best service and rate. So I think this technology, we really have to blend that human knowledge, as Jimson said, that insight to your property. I didn't even know that having a fire hydrant within 30 yards of my property was one of those things that would drive down costs. So again, how are we going to get all those subtle details in? And I think also too, what's important is, and we've tried to integrate about 4 of these different vendors and tech companies, and quite honestly, customer service has to be extremely strong. And then pricing. Pricing needs to be competitive. So, we're in the midst of integrating, probably 3 different companies right now, and we're really an advocate for our customers. So we'll see. I think that the technology is still emerging. It's not that easy button quite yet. They still have some details to work out.
Yeah. So I'd love that, we'll wrap up today with each of you could give a piece of advice to either lenders or borrowers on how to navigate what's happening in the market right now in California. What would that be?
Education. I need to educate, make sure all my loan officers understand what's happening in the marketplace with insurance, that they understand that our borrowers do have choices, and can work with some great people who can lead our borrowers through the process. But let's do this super early in the process. Let's not wait until it's funded or already approved. Let's know that every home is going to need insurance when it closes. So why not start that early in the process?
Good advice. Good advice.
I thought I would say, partner with, a trusted insurance provider who can help support, get your home buyer, coverage they need at a price they can afford, because that's critical to the overall loan process.
Yeah. Well, thank you both for being on Connect. I have greatly appreciated this. It's a very important topic for our state and our membership. So I appreciate you sharing your expertise with everyone. Thank you for being on the podcast.
Thank you.
Thank you for having us.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.